Welcome back. Well, the market's on the verge of moving to the green, so that initial dip has got bought into. The market's back around that 18,200 odd mark, but don't lose sight of the broader markets. The mid-cap index is up 0.4%, which is heartening. Well, let's focus on cement companies then. Various brokerages, they have come out with notes with regard to pricing in the month of December and also the attempted price hikes that we could see in January. To get a sense about how demand's shaping up, what about pricing? Well, we're joined by Mr. H.M. Bangur, the Managing Director at Shree Cement. Hi, Mr. Bangur. Good morning. Firstly, Happy New Year to you, your family, as well as the entire team at Shree Cement. And thanks so much for speaking to us here on CNBC-TV18. Well, let's get straight to business then. Pricing has been a little bit subdued, I understand, towards the end of December. So you operate in two big markets, that's the north and the eastern part. What have been the pricing trends? Could you tell us what has been the price difference between Q3 average in comparison to Q2? Go ahead, sir.
In Q2, prices were subdued and definitely the costs were much higher. Now in Q3, the cost of energy, which was around $200, has come down to $170. So the prices have also improved a little bit. So we were expecting that because of good demand, prices will increase, but the increase is very subdued, only 5 rupees or so. But this is the way cement industry works. Every year, on a yearly basis, price increase is only 3 to 4%. There can be some spurt sometime, but that's all. So prices are basically, you can take it for granted that year after year, about 4% price rise will be there.
Okay, that's for the year, sir. But just for this quarter, if I compare Q3 with Q2, what has been the rough price increase in the the regions that you operate? An average price difference, per bag or per ton, whatever you want to give us.
Yeah, well, it is all the same. About 2 to 3% is the price increase in north as well as east, and that's all. And it is not very surprising for us.
Okay. Now, you began that answer by saying that in spite of good demand, prices, can you just explain that to us? Because we got some fairly good numbers from the macro. The core sector data showed that cement has done well in November over October. Is this season much better than previous seasons?
No, here is a big difference. Last year and this year, October, the demand is lower because of the Diwali and festive season of Chhath.
Yes.
When we take October and November put together, overall 10 to 15% demand is high. But if you see only November, it will be more than 25% hike.
Right.
Okay. So then the comparison is not very clear.
No, I get, but 10 to 15% also is a good number, isn't it?
Very good number. The government is spending a lot of money on infrastructure, and we are very confident that going in future, government spending will be good. When we see the 1.5 lakh is the average number for GST collection, it gives great confidence that government will have enough money for infrastructure projects.
Mr. Bangur, good morning. So just a little more on demand and volumes. In Q3, what would the expected volume growth be? Will it be about 7-8%, or do you think it would be double-digit growth?
It will be double-digit growth in Q3.
Okay.
And in Q4 also, we expect a double-digit growth for the industry.
Okay, so double-digit growth for the industry both in Q3 and in Q4, and for yourself as well.
You said 10 to 15%. So would it be at the higher end of that range?
No, industry should grow at 10 to 12%, and our growth will be a little higher than the industry average.
Okay, so Shree Cement's growth will be higher than 10 to 12%, more than the industry. Got that. A little more about where the demand is coming from. You said government spending has gone up, but within private as well. I'm asking because the last commentary we got from Tata Motors indicated that there's a big improvement in cement consumption. Is there a pickup in corporate capex? Are there green shoots over there? Is it more from real estate? Can you just give us some nuances?
No, I will say that tier 3 and 4 cities, lot of subsidies or one way or other, the government is spending or giving grants to the individuals. Okay. So people have surplus money. And now people, after meeting their household demands, are coming to their own housing. Housing need was always there and is almost unlimited need of housing is there. But the need will convert into demand only when money is available. So now with the India GDP growth, money is being available. So I feel 7 to 8% year after year compounded for next 5 years growth may be there.
Oh, that's so good to hear, Mr. Bangur. Now, if we can drill it down to margins, how do you think the EBITDA per ton will go? The worst of inflation, at least WPI, wholesale inflation is clearly behind us. So, do we see the EBITDA per ton improving?
No, EBITDA per ton is not improved because every cement company, those are having 3 to 4 months coal stock, which is old. You will see the EBITDA increase in the Q4 when the cement prices will be little up and our energy cost will be lower.
Okay. All right, Mr. Bangur, give us a couple of numbers then. EBITDA per ton had moved down to around 700 rupees per ton, and as you had indicated that Q4 is when you'll get bulk of the benefit, so you'll have higher pricing, better volumes, and lower input cost. So you expect the EBITDA per ton to improve to what, more than 1,000 rupees from around 700 rupees that you did in the past quarter?
Around 1,000 rupees. Now,
Q4?
950 to 100, 1,050, something like this. 1,000 rupees may be the average range.
That's for Q4.
That is for the Q4.
Okay, all right. And you know, when we last chatted, you were telling us that Mr. Neeraj Akuri, he's come on board. Now you're going to be drafting a new strategy, whether you want to go for inorganic growth. Have you come up with some strategy, some region that you'll want to focus on? There are a couple of assets that are up for grabs, as per my understanding. Have you looked at any of them? And would it be in the west or the south?
Right now, we are focusing only on organic growth. Inorganic growth will take some time. We have not been very clear about the inorganic part.
So you haven't spoken to any of the cement players?
A lot of projects. In the COVID time, we had deferred a lot of projects. Now, all the projects are on in line, and next 2 years or next 1 year, good capacity addition will be seen.
Okay. When you say good capacity addition, what will it be? What are you looking at over the next 2 years?
About on a base of in 1 year about 10 million ton cement and 6 million ton clinker. So the clinker and cement will be there about 10 million ton in 1 year time.
Okay. Mr. Bangur, as an industry veteran, there is now one huge player in the sense of the Adani Group buying, both ACC and Ambuja from Holcim. Does that change the arithmetic in any fashion in terms of pressure on margins, or is it likely to? In any case, how does the arithmetic or the chemistry in the industry change?
First of all, the change is from one promoter to another promoter, from one foreign promoter to one Indian promoter. So no concentration has taken place. So one big player was always there, so the same big player name has changed.
Okay.
Now, coming to an Indian player, Mr. Adani, we feel will be much better than a foreign player. He also has to improve his capacities as everybody was improving. So I don't think much changes will be there, except that now the profit will go to the Indian promoter.
Okay, all right. Mr. Bangur, final question. Just want to clarify. You said double-digit volume growth for Q3 and Q4. So for the year, earlier you were talking about 10% volume growth. You want to up that a little bit or stick to 10%?
No, double-digit 10% is good enough, and we are very happy about it.
For the year, okay.
Okay. All right. Thanks a lot for joining in, and have a great year ahead, sir. Wish you the very best this year, and hopefully we'll speak again soon.
Thank you.
Okay. Thank you, Mr. Bangur. And if you noticed, even that was a pretty encouraging conversation.
Yes.
I mean, double digits.
Absolutely.
What were we looking at? 7 and 8%
Yes.
until recently. Now 10 to 12, and to do even better than that, maybe 15.
And big government spending coming through. That's the common narrative, right? From
And
a lot of corporates.
Even the personal consumption, because he said clearly tier 3 and tier 4 cities are showing a lot of housing demand. So, I mean, the key takeaway seems to be popular.
Just to weigh in, it's good to see government spending, but I would like to see more amount of housing spending because that's where the profitability comes out from. You have a trade and a non-trade market out there. When the trade market, moves up, that's better in terms of profitability. But overall, good commentary coming in from them, Lata.
Oh.
Yeah, okay. Now let's move over to another important part as the year turns. Our focus turns to the IPO fundraising. According to Prime database, in 2022, 40 Indian corporates raised 59,500 crores through the main board IPOs. The notable, of course, this amount is half of what was raised in 2021. So not a great year for IPOs. And out of the total funds raised by Indian corporates for 2022, 35% was contributed by one company, LIC. To discuss more about fundraising trends, we are now joined by Pranav Haldia, the Managing Director of Prime Database, and Vivek Toshnwal, ED and Co-Head, Equity Capital Markets at Axis Capital. Gentlemen, thank you very much indeed for joining us. Vivek, I'm going to start with you. You have the finger on the pulse of the market. Do you think that the kind of downbeat 2022 in the IPO market may continue because of global uncertainties?
Good morning, Lata. Despite global uncertainties and macroeconomic headwinds, we saw 40 IPOs in 2022. While the fundraising was dominated by one IPO, as you rightly mentioned. But what is important to note is that there were more than a dozen IPOs wherein the fundraise was greater than 1,000 crore. This is a very high number when you compare it historically, and Pranav can vouch for it. There is no doubt that India is the most promising IPO market. In 2022, we also saw a large number of block trades from financial sponsors and promoters. We believe that the fundraising trend, as well as block trades, as well as a lot of fundraising on the follow-on side, which was amiss last year, will be happening on the primary market side this year.
Okay. So Pranav, coming on that, Happy New Year to you and thanks for joining in. Tell us what are the prominent IPOs that you're looking at this year? And I want your thoughts on this whole, valuation controversy with respect to some of the newer IPOs, right, that are coming in. Mamaearth, for example, a lot of people on social media asking what has changed in the last 12 months for the IPO to get 3 times its valuation. What are your thoughts here?
Well, very happy New Year to you too. To answer your first question in terms of, the pipeline, I think, just like you saw in 2021, you had companies from a broad range of sectors coming to the market. Of course, unlike 2021, where you had a lot of new age technology companies hitting the market, last year you had only the solitary IPO of Delivery, which hit the market. Of course, for obvious reasons, the performance post-listing of some of the NATCs has not been as per expectations. Also, we've seen SEBI recently mandating more disclosures from such companies in terms of their KPIs, in terms of their prior transactions. So I think it will be a while before we see, more companies from this sector hitting the market. Some of the interesting IPOs next year, I think, of course, there's Fab India, there's TVS Supply Chain, Aadhar Housing Finance, McLeod's Pharma, Navi Technology. So again, across sectors. And from the new age companies, OYO is one which is being looked forward to. Go Digit is another one. And of course, like you mentioned, Mamaearth is another one. Coming to the valuation part that you referred to, look, our view has been that, it is unfair to judge IPO companies until perpetuity, on the basis of their market price and say that, oh, that IPO was expensive, that IPO was cheap. What is that timeline that we're looking at? Is it 1 month after listing? Is it 3 months after listing? Is it 6 months? Is it 5 years? So, once an IPO lists, it becomes like any other listed company in the secondary market whose share price moves on the basis of the company's performance, how the sector is doing, and how the overall economy is doing. So I think that if an IPO gets subscribed even a single time, that shows that there was enough demand for that IPO at that particular price. So that's where,
Pranav, it's a little difficult to pass this on to those who bought the Paytm and the PB Fintech and the, Nykaa IPOs. after a point, it was a little painful.
Just to give the number, right? Last year in Jan of 2022, Mamaearth's valuation was $1.2 billion. In less than a year, they are asking for a $3 billion valuation. Now, how does one justify that, especially at a time when IPOs have resulted in so much wealth destruction for investors, was my main question, Pranav.
Right. I think Vivek will probably be in a better position to answer that question. But, you have seen several, just taking an example of a few PSU IPOs that you saw a few years back, where there was a lot of talk that, oh, it was priced too cheap by the bankers, and because, the price jumped on listing. Now, so in the same light, how do we, like I said earlier, at what point do we say that, look, the current price is higher than the issue price or lower than the issue price, and hence the IPO was, expensive or cheap?
Okay. No, I take your point entirely. It is your time zone. But the question exactly that I asked Vivek, what's your estimate of 2023? Does it continue the downtrend of 22 being less than 21? Or do you think, it could be a good year after all?
Lata, we strongly believe that it is going to be a better year. And I again want to reiterate
Vivek,
that,
I got that from you. I'm asking Pranav whether he shares your optimism. Pranav?
Yes.
No, I was asking you the same question. Do you think 23, are you optimistic about 23 as Vivek is?
So, I think, it's very hard to predict, as we've seen in the past as well, and I think COVID was a very interesting period wherein, no one expected the kind of fundraising that you saw in the second half of 2020 and following on to 2021. So it's hard to predict. What I do believe is that you will continue to see some of the smaller ticket deals that you've seen in November and December. In fact, one of the interesting parts about 2022 has also been that 17 out of the 40 IPOs were actually in the last 2 months alone. And that's, kind of testament to the volatility that you saw through the year. You had a few months with zero deals, absolutely. So I do expect that, in the first quarter, you will continue to see some of the smaller ticket deals getting launched. I think the pipeline, of course, is continues to remain extremely strong. There are 54 companies looking at raising 84,000 crore, which are holding SEBI approval, and another 33 companies looking at raising 57,000 crores, which are awaiting SEBI approval. So I think pipeline is not an issue. There are a lot of companies which are looking to provide an exit to their PEVC investors or looking to raise fresh capital. Barring any major negative event, I do expect some of the small ticket deals to materialize in the first quarter. Once we do see sustained interest from the FPIs returning, which has been a bit of a hit and miss in 2022, I think that's when you will start seeing some of the larger IPOs also hitting the market.
Okay, what about on the divestment front? Vivek, what are you expecting this time? The government has just amended those minimum public shareholding norms as well. What's the outlook like for this calendar year?
We will have to wait to hear from the government in the upcoming budget. Clearly, there was a shortfall in the last year's target, which the government had said, but that was predominantly due to global volatility and significant macroeconomic headwinds. We believe that the government is likely to set a more realistic divestment target this year, and there would be a lot of follow-on deals coming in from the government.
Are you expecting promoters to take advantage of the markets and sell out? Vivek, has it already been going on? Are you seeing that continuing?
Yes, we have seen a lot of promoters and financial sponsors trying to monetize part of their stake in the market. We believe that the trend will continue in 2023. A lot of financial sponsors will look forward to monetizing part of their stake in listed companies.
It's absolutely quiet for the market. Let's get Mitesh Thakkar into our conversation now. Mitesh, the mid-cap index is picking up a little bit, but otherwise frontline indices are so quiet. At this 18,200 mark, what is your suggestion for the rest of the day and what are the stocks you're looking at?
Yeah. So my understanding is that the Nifty still remains ranged and not much kind of directional bias is being seen on the charts over here. So trading will be more of on stock specific basis. We've talked about metals, so one more name which comes on the list is Indices. That's a buy with a stop below 124 for targets of 132. And after a long time, there's some positive traction happening on the charts of Metropolis today. That's a buy as well with a stop below 1315 for targets of 1370.
Okay, let's shift focus now to the commodity markets then. Mitesh, thanks a lot for that. Manisha Gupta is joining in. Manisha, what's the one commodity you're looking at today?
I already have the biggest loser, pardon me, for the year, and that is the gas prices, 7% down overnight, and we seem to be making lower lows on charts when it comes to the US natural gas prices there. Well, we are trading at multi-month lows onto this one, and when you look at what we've done in last quarter or last 1 year, you'll see how sharply we've come from the highs of the year there. Well, the weak industrial demand estimates for 2023, the first quarter at least, is what is weighing onto the prices here. And then the markets also are looking at higher production in US, almost record highs, and very strong exports from US as well are keeping a lid on prices. In US and Europe, the inventories also continue to be near 5-year average or higher than where they were in the last year. And the prices clearly have extended losses to nearly Feb 2022 lows for the European gas prices as well. The UK gas prices also are trading at a 9-month lows right now. And when you look at the European Union gas prices, they are 75% down from the August all-time high of 350 euros per megawatt hours there. So sharp declines, as I said, is what we are seeing into this one. The markets are looking at mild weather forecast. The increased wind power generation also has led to less usage of gas in air conditioning, and that is what is weighing onto the markets there. Take a look at the fact that you have seen supplies continue to increase. So the Freeport plant in Texas is expected to restart. It had shut in the month of June, and we are expecting that all of it will come back on board by the end of January. Germany storage stands at 87% and EU average storage at 83.2%, which is higher than last year average as well. So there are no concerns really when it comes to availability, and the affordability when it comes to gas also seems to be now improving into the markets there. Take a look at the prices then, and that is what the street clearly will follow going forward from here. The last 1 year has seen a high of almost $10 per MMBTU. The low has been 3.5. Last quarter of the previous year, we were trading at around 5 to 6, but we're trading at 4.10 right now, not too far away from the lows of last year. Same is the case with the European Union prices, 350 of an all-time high. The low has been 70. We are trading at 73 right now, with markets anticipating that you could be looking at further declines coming in for this one. This is the forecast for 2023, and all those numbers are, by the way, higher than where we are trading at this point in time. Enverse is the only one which believes that by summer we'll see 3.5. Everybody else is looking at higher average in sense of the gas prices, but we've started the year much lower at around $4 per MMBTU, with the expectation that this month could see further declines because of mild weather forecast.
Okay, all right, Manisha, thanks a lot for that. Well, let's move on to a couple of stocks. And LIC is buzzing in trade. Nimesh highlighted that the stock, in his standard brokerage report of the day. Let's revisit that. Nimesh, tell us more.
Hi, Nigel. So, LIC is in focus today after Kotak Institutional Equities initiated coverage on the stock with a buy rating and a target price of 1,000 rupees, a potential 40% upside from current levels. Now, Kotak believes that LIC's dominance is unparalleled with 37% APE market share in FY22. In fact, companies' high productivity versus the peers, remain bedrock for companies' market leadership, market dominance, as well as cost leadership. In fact, the gradual shift in the product mix should boost VNB growth despite moderate APE. In fact, the account bifurcation has led to a big surge in the embedded value and earnings, despite the return on embedded value was depressed. In fact, at current valuations, Kotak believes that LIC the investors are largely ignoring the strength what the LIC has. So, and hence they have initiated coverage with a buy rating and a target price of 1,000 rupees.
All right, thanks a lot for that. Piramal Pharma is also in focus this morning. Ekta is here to tell us why. Ekta, over to you.
Well, Jeffries has written on Piramal Pharma. They've initiated with a buy and a target price of 150. According to them, the CDMO, which is basically the contract drug manufacturing unit, is on a cusp of a turnaround. Headwinds which have been faced over the past 12 to 18 months are now getting resolved as per Jeffries. They estimate a 12% revenue and a 21% EBITDA CAGR over FY22 to 24 based on factors such as the CDMO turnaround, steady growth for the complex hospital generic business, scale up of the consumer health business. It trades at an attractive valuation according to them as well, at around 13.3 times FY24 estimate and around 10.6 times FY25 based on EV to EBITDA.
Okay, all right. Thanks a lot for that, Ekta. Well, let's hop across to Abhishek. He's here to tell us about Federal Bank. Their quarter 3 business update came, Abhishek, just half hour or so ago, and it looked quite good.
Well, the business momentum continued to remain strong. Deposit momentum has picked up really well. Deposit growth on a YY basis is perhaps the best in last 10 quarters. Sequentially, that is quarter-on-quarter, deposit momentum is the best in 7 quarters. So deposit is up 14.8% YY and about 6.5% quarter-on-quarter. They have lost out on CASA ratio or the low-cost deposit ratio, which has declined on a sequential basis. Advances growth, they continue to remain strong, up more than 19% YOY and about 4.3% sequentially. Remember that in the previous quarter, they had a loan growth of nearly 5 to 6% on a quarter-on-quarter basis. So despite the strong base, they have seen a strong loan growth momentum even in this quarter. Credit deposit ratio does decrease slightly on a sequential basis, given the fact that deposit momentum has been pretty robust. Back to you.
All right, thanks a lot for that, Abhishek. Federal Bank up about 1%. Let's slip into a quick break. Some macro data on direct tax collections and core sector were troubling in nature, so we'll track that. But GST collections were quite robust, so a check on how growth will pan out in 2023.